My name is John Marshall. I'm the CEO of the Ontario Capital Growth Corporation. The corporation is an agency of the Ministry of Economic Development and Innovation. We're both an LP and a fund of funds called the Ontario Venture Capital Fund that Carew is here to speak about. And as well, we manage a $250 million direct investment fund. We've deployed about $55 million to date into 24 companies. We've got 26 qualified investors, including folks like John at OMERS. We've done deals with angels, 3 angel deals closed to date. The interesting thing is about only half of our capital that we've deployed alongside is venture capital. So it shows the importance of other sources of capital, and about 40% of our capital actually comes from outside because we've done deals alongside US-based funds in the Valley, in Boston, Israel, Delaware Corps, Luxembourg Corps. We don't really care. So I think really the session today is about the importance of looking at a broad range of capital, both venture and angel, both in Ontario, Quebec, and the US. And at a time now for those in Ontario with the Drummond Report, the government's looking at how they can maximize the impact of the dollars they spend, and being an investor in this space is really important to levering that. So today's really about showcasing the partnerships between Ontario and Quebec and showcasing how we're working to build a global venture capital industry. And so the panel today of Ian, Jacques, and John are all playing in that space and are playing a very important role. I'll go back to a story here. When we were doing the fundraising for the Ontario Venture Capital Fund, not only did I get to meet the folks at OMERS and others during that process, but I also got to meet Jacques when he was at the fund. And one of the interesting things was through the investment side was we also began to look at the marketing and business development side. So we'd hosted Bio in Boston the year before. Quebec did an event and Ontario did an event, and they were both separate. And we both kind of competed for investors, out of the Boston area. So in San Diego, we did a joint event, and that was to, where we had Minister Bachchan and our Premier there, and it was about actually how we actually showcase Ontario, Quebec together to global investors from San Diego or Boston. Maybe for a second I'll talk about Ontario's capital strategy. So really, the Ontario capital strategy is really underpinned by investing alongside market forces. We understand that we take a leadership role and have to be a catalyst to enabling that to happen, but we need to actually make sure that we're following market-based investment decisions. Ian Klugman today talked about what I would call the demand side of capital, where we need to make sure that we're creating strong companies that are investor-ready. The initiatives that Ontario is doing through our seed fund, through our demonstration fund, through our direct investment fund, and our fund of funds are all about the supply side. But the government recognizes that both those things go very much hand in hand. So today the panel is really around what are we doing to create a global venture capital industry, and how are we responding to those continuing challenges? So I'm joined today by Ian Carew. Ian is an investment partner at Northleaf Capital Partners. Ian previously was at, so Ian manages the $205 million Ontario Venture Capital Fund. Ian previously was at Teachers and Kelpers. Ian manages both Northleaf's Asian and emerging markets, as well as their Canada and US investments. Beside Ian, to his right, is Jacques Bernier. Jacques has a very interesting background, both as a VC, an entrepreneur, and an investor, both as an angel and a founder of many emerging technology companies. And Jacques is the manager of the $750 million Teralys fund in Quebec. To his right, John Ruffolo. John was previously, many will know him in this room, from Deloitte, working directly as a partner at Deloitte, working directly with companies. John is now the CEO of OMERS Ventures and the Senior Vice President of OMERS Strategic Investments. So thanks to the three of them for coming today. So when we had our little conference call, which everyone has when they're doing a panel, we talked about it, and really we want this to be an interactive session. So I'm going to ask a couple questions, but then we want to make sure we turn it over to the audience. So Ian, I'll ask you to do a little presentation on OVCF. So.
Northleaf Capital Partners is Canada's largest independent private markets fund manager and advisor. We manage over $3.7 billion on behalf of our investors. We have 2 Canadian-focused mandates. The first is with CPP, It's a $400 million program targeting private equity funds, sub $750 million. And as John mentioned, we also manage the OVCF program, which targets Ontario-based and Ontario-focused venture capital funds. John touched on a couple of the unique aspects of it. One is the selection of an independent manager, I think, was key, so that the investment process and decision-making is outside of the government. So that really helps, facilitate the investment process for funds, and we can really make decisions in a timely manner. And we report back to both the government and the other institutional investors, but the decision-making is on our side of the table. And the other unique aspect, I think, again, is the collaboration is partly government-funded, but the majority of the capital has come from institutional investors, which again helps keep it a very pure investment decision. To date, we've made 7 fund investments into Ontario-based and Ontario-focused funds, totaling about $140 million of commitments.
Thanks, John. So as John mentioned to you, I've got a kind of a different background than you see normally. So for 25 years, I was an entrepreneur and an angel like a lot of you. In 2004, 8 years ago, I joined the dark forces and went on the venture investment side. And 2 years and a half ago, I went darker to the fund of fund side of investment. The reason that was behind all that process is that as an entrepreneur, I built companies. And in 2004, when there was a huge crisis in Quebec in terms of venture capital, I was asked by the largest fund in Canada, which is the labor sponsor fund, called Solidarity Fund, to head their technology group. The reason that I accepted, at first I said, are you crazy? I'm an entrepreneur, I'm an angel, I'm not an institutional investor. But the key was, I'll help the entrepreneurs in Quebec. That was the reason why I accepted to go there. And in 2007, when I quit the Solidarity Fund, and I was thinking about going back to start a new ventures, I had some crazy ideas. I was asked, well, would you like to create a new fund in Canada? I had presented the need for it. And in 2009, and the worst time in history of the last 20 years, 30 years for venture, I was able to raise a fund of $700 million to do specifically investment in funds in technology. So we don't invest in any other sectors. It's every sector of technology, life science, clean tech, IT, and whatever tech comes up tomorrow. The idea then was, if you recall, 2008 financial crisis, no one wanted to invest in venture capital. It's starting slowly to move back, but there's almost no one investing in venture these days. And I will tell you an interesting story that will give you an idea of why we created the whole Teralys project. In end of 2008, there was a private meeting with every Canadian institutional investors talking about venture capital. And after 5 minutes of discussion about venture, I was beginning to put my boxing gloves. And for those who knows me, it's totally true. After 10 minutes, they were down, and I was hitting with my bare neat hands because everyone was bitching about venture capital. At the end of the day, everyone was saying, we didn't make money, we don't care. Why bother? At the end of an hour and a half, I told everyone, well, can I make my conclusion summary of the meeting? I said, yeah, sure. For the last 10, 15 years, the number of institutional players that invest in venture capital has done this. The one remaining, their allocation has done that. There's not enough money now in Canada to do 10 funds over the next 5 years. The entrepreneurs are looking up, they don't see money. The innovation process is broken at university and R&D centers. You're telling me that you have no interest in investing because you've lost money, so I should lie on my back, put my belly up, and let myself die. Well, I'm sorry, but I've got a daughter, and no way in hell I'm going to take a chance to raise her in a Canada where her future goes through natural resources and Walmarts. I'd do something. And that was the launch of Teralys. I got very lucky. I'm a lucky person. I got very lucky where 3 groups in Quebec decided to be behind me, and Fonds de Solidarité, Caisse de dépôt, and the Quebec government put up $700 million for a new fund of fund. We also manage another $700 million of fund of fund for legacy funds that we manage for the Solidarity Fund and Caisse de dépôt. The idea was having our feet in the past and in the future, in the past and the present of venture, it would be easier to build the future of the landscape of venture capital. So far, we've invested in 4 funds that were announced already. At the end of the quarters, we'll have another 4 announced. So after 2 years and a half, which is half the time of our investment period, will be at half the allocation of our fund. So we're very lucky to be almost precisely to the month in line with our objectives. We have in Canada and in Quebec too little numbers of people investing in this class. We will need in the future soon, Ian will be running out of money at Northleaf with OVCF. They're a great partner with us in different things. We wish that the Ontario government, really seeing what they've done, continue to support them and create an OVCF too. We also hope that people at BDC, which are going through not difficult, but challenging times, will get the support of the federal government also into putting money into funds of funds, so that we are not alone at Teralys to be able to invest in fund and create this landscape for the entrepreneurs to grow. And in fact, at the end of the day, it's the entrepreneurs who are the fuel of the economy. Us on the venture capital side or on the banking side, we're just a commodity that helps them to create the wealth. Thank you.
Thank you. So I'm John Ruffolo, and for those of you who are not familiar with OMERS, OMERS is a approximately $60 billion pension fund based in Ontario. At OMERS, over the past year and a bit, we have been busy building what we call our innovation platform, and there's really 2 parts to it. There is one part, and that's why you see a little split title that I have. One deals with OMERS supporting the innovation ecosystem in Canada. And that would involve actually my involvement with everybody on this panel. We are the only pension fund who have invested in the Ontario Venture Capital Fund and work very closely with both Ian and John and really focusing in on the ecosystem, not only in Ontario, but the rest of Canada. And then with Jacques, we spent quite a bit of time with the Quebec government and with Teralys to stimulate further the ecosystem in Quebec, and we have a significant desire to spend a lot more of our capital in the province of Quebec. That's kind of one side of our business. The other side of the business is the building of our direct venture arm. And it was technically created a year ago, but practically speaking, we really opened our doors about November of last year. So we're really only about 3 months old. This is really a new, bold experiment from a pension fund perspective, where we're going out and being our own GP and LP and hiring our team to invest in technology, media, telecom companies in Canada and around the world for that matter. Just to give you a little bit of a highlight reel of the mandate that we have. Right now we have about 10 people on the team, and so we are very much open for business. There's a couple of more additions that will occur, but it's very entrepreneurial focused. Really, for the first time, and once again, you know, we've hired people unlike the rest of our pension fund. 4 out of our 5 managing directors have been CEOs of technology companies, both in Canada and the U.S. So it's very, very entrepreneur focused as opposed to financially focused. We are technically a global fund, but I would say to you that our focus right now is really Canada and the US, and really Canada. I would say for the first 3 years of our mandate, we'll probably be looking at deals that are 75% in Canada and 25% in the US. And when I say Canada, it is coast to coast. We have deals right now that have either closed or hopefully will be closing in the next few months that are in fact coast to coast. So we're pretty pleased with that. From a sectoral perspective, it is technology, media, and telecommunications. And in technology, it's quite broad. It does include clean IT and healthcare IT. And what's perhaps most relevant to you is really from a life cycle or stage perspective. And this is part of, I think, the surprise that people have, and we really believe in this thesis, in that for 80% of our deals, and this is what our expectation is, we are coming in very, very early. We are coming in to co-invest actually with angels. And this is an opportunity where it really hasn't been around really for a long time in this country. But 80% of the time, we're looking to cut our first check at between $500,000 and $2 million. And the difference is we plan to fund all successive rounds thereafter, all the way to ultimate profitability, liquidity event, IPO, what have you. And we have enough capital to kind of cover that entire, what we call life cycle investing. And I'll give you an example in a minute. In the remaining 20% or so of our deals, we'll be more opportunistic, and we'll do B or C round investing. And we expect to cut checks in the $10, $20, $30 million range. So when you look at our portfolio, what we expect to see is a number of companies that will invest first our $500,000 or thereabouts. But when we fund each of the successive rounds thereafter, cumulatively, we will have invested in that company $10, $20, or $30 million. Or in our 20% of our fund, we expect to cut one shot a $10, $20, or $30 million check. So when we say our check size range is between $500,000 and $30 million, we believe it really covers the gamut in this country. If we need to go over $30 million, we'll do that. But frankly, right now, we believe that 99.5% of the deals, at least in this country, really fall within that range. And in terms of the strategy, particularly with angels, one of the opportunities that we saw is there is a tremendous amount of an angel network in this country. And one of the challenges that angels have felt is being crammed out on that next round, or not having that institution who can follow on. And part of our strategy is to work very closely with the angels, invest in the same class of shares with the angels on the same very, very simple terms, and not spend all of your time trying to architect a term sheet, but rather really doing a business deal. And typically we'll come together with an angel. Perhaps on the next round, the angels will continue with their pro rata, but then as we continue on, the angels will typically stop. We will continue funding, and we'll make sure that we have a vested interest not to cram out an angel and to really protect the angel investment as the company continues to mature. Thank you.